many people don't know what's next.
We have so many discussions, doubts, and pros and cons about this topic.
Specifically, we focus on scalable asset light.
Relationship with investor is like relationship in the couple.
If I know what would happen in 3 to 5 years, I think I will be much more successful.
Good day to everyone. This is Venture Investor Economic Forecast by InnMind, and today our guest is Impact and Venture Investor, Director at Climate-KIC, Venture Partner at Loyal VC Venture Firm, Pan. Hello, Pan.
Hello, how are you?
Awesome, thank you. How are you? You are in Switzerland now.
Yes, I'm in Geneva, and it's lovely weather today. Should also be for the weekend, so looking forward to that.
Pan, the topic of today's discussion is the situation around pandemic, especially its effect on the venture and startup industry. So you are deeply involved, you have huge experience in venture capital in different roles. And Loyal VC, as far as I understand it, is the Canadian venture company focused on early stage startups. How do you think how this crisis influences the venture capital industry?
Well, I think as you can see, the stock market has gone up, 20% in a month, but I think the effect on the VC markets is less than in listed equities, as pricing is always a negotiation. But I think still valuations will come down with the recent frothiness, for example, in pricing. Our early rounds, particularly in the US and China, will be more hard hit. We're already seeing some down rounds and repricing by companies in the market. I think as listed equity find their footing and a new baseline, VC valuations will follow.
So it is really happening. I mean, a lot of startups were worrying about that, and a lot of experts were forecasting that. You see it's happening.
Yeah. Well, I think, for example, from the perspective of fundraising, I think in the short term, it would make fundraising more difficult and may take longer. But in the long term, I don't see that it will have a serious impact. I think investors with the risk appetite for VC will still invest, but competition will be lower and entry values lower for the immediate period. Probably not a lot of new capital as investors reset their perception of and pricing for risk. So I think the startups should become more concerned with the commitment of their investors, whether current one or new ones.
You mean that if they have some preliminary commitments during these days, they should actually hurry up to sign up and to finalize the round?
Well, not necessarily, just that when they choose an investor, they should be concerned about not just the amount of funding that they provide, but also their commitment.
Mm-hmm. Pan, can you tell us a little bit more about your investment strategy and what kind of startups are you looking at?
Well, our investment strategy, for Loyal VC, it's a seed early stage global tech fund, sector agnostic, where we have a more unique data-driven approach. And the idea is that you cannot judge a startup based on a pitch, particularly at early stage. And so our business model, which the fund is launched by two INSEAD alumni, which I am also one. The idea is that you need to work and follow a company for a while to see whether they are transparent, proactive, whether they are exaggerating, they are adapting their business models according to circumstances. So we invest very little money over 10 months, and every month we monitor the company. But if the company past that 10-month period, we then follow up with a much bigger commitment. And also we have a very unique pipeline. We source the companies from two sources for the ease of admin. One is the Founders Institute, which is a global startup accelerator with chapters everywhere in the world. And another source is INSEAD founded startups. Now for the NPK Capital, actually my sector expertise are in agri-food, agriculture, food tech, sustainable climate finance, and blended public-private finance. And for the agri-food strategy, our investment focus is sustainable agriculture and food tech across the entire agri-food value chain, from inputs like plant science, soil tech, animal health, food loss and waste reduction management, and finally food tech. Specifically, we focus on scalable asset-light business models leveraging on two things. One is biology or nature, and two is data. And we haven't changed our investment focus or criteria given the current situation. In fact, we think that it has highlighted the importance of food and agriculture.
But did it influence your speed of investment decision taking, or the assessment process? Are you investing just online after Zoom communications, or only after offline meeting?
No. I mean, we are, as I said, we look for very scalable, not capital intensive models, leveraging biology, so nature-based solutions. In fact, because nature can do a lot, and also data. There's a lot of, let's say, data platforms, data collection via apps, all these digital decision support apps for farmers. However, adoption is a key challenge, particularly by farmers in the agri-food sector. But we think the solutions that will scale our platform that can aggregate that data, make sense of them, and use them to, let's say, increase the capacity for funding, meeting farmer financing needs, for intermediaries such as insurance companies, food financing, trade finance companies. So solutions that will leverage and make sense of this data for their decision-making business models. So particularly in the we call it agri-fintech space.
You also mentioned that you have two main sources of startups. Why don't you expand into more sources? In agri-tech and food tech sector, there are a lot of specific platforms and accelerators for focus on them.
The sourcing from the two sources of INSEAD and Founders Institute is only relevant for the Loyal VC fund. That is not for NPK Capital, which is on agri-food.
Pan, you are so deeply involved in impact investing field. Can you please tell to our subscribers and those who will watch this video, what is impact investing? Because we have so many discussions, doubts, and pros and cons about this topic. Please open the doors to it.
Yeah, I mean, I think that is what you just mentioned is very true. I think everybody had their own meaning of what impact investing means. I think for me personally, impact investing means looking at the return to a investment, not just on financial returns, but additional, let's say, ESG returns, environmental, social governance. I think in the last 5 years, particularly with the effect of climate change, the topic of impact investing has gotten a lot of visibility. And now, again, I think from consumer pressure, government regulation, particularly in the EU, and also from a risk disclosure perspective, impact investing has become a very prominent topic in investment management. But I think for VC investors, that's still a pretty foreign concept. In fact, for Loyal VC, impact is also something the fund is very much concerned with. So we're actually developing a ESG framework adapted to the private equity or VC market, but one that is data driven. And we want to make sure that every criteria or metric that we use is backed by some kind of data or data driven records. So in fact, we're thinking maybe we would launch a side impact fund from the broader Loyal VC portfolio, because we do see demand from investors. But again, as I said, because investors have different ideas what impact investment means, depending on the investor, they could be seeking something different. Yeah.
You mentioned that there is a huge demand among investors in impact investment opportunities. And can you please elaborate a little bit more on that? What I mean here is that indeed, a lot of people, and especially investors in Europe, started to claim they are doing or starting impact investments. Do they get some tax benefits on that? Or is it really so that all of them are so motivated to bring the positive impact to the society?
I think, as I said, it depends on the investor. I find that in my experience, family offices, when they say they want to, do impact investing, they typically like to invest directly, because they need to understand and believe in the story of the company, what exactly it does. Now, for institutional investors, often they have an impact investment bucket, which they need to allocate, but then they normally go with the listed equity funds, because those are the ones that have scale right now. And also, I think we should differentiate between impact investing and development sustainable financing, because many of the larger impact investing funds invest exclusively in emerging markets. I think many investors confuse, between concessionary capital and foundation, philanthropic capital, and impact investing and development finance. So I think, that points to the confusion and different type of understanding what impact investing is.
And what is your criteria of impact startups for your funnel? I mean, on my opinion, majority of startups can be considered with impact factor, because, for example, even if it is some e-commerce app which allows to sell some farmers' products or whatever, or anything else, it can be somehow connected with impact factor and demonstrate how they bring certain impact to certain groups of society.
As I said, for Loyal VC, we're developing that model, a framework, and it has to be data driven. As you said, everybody can claim that they're making an impact, and often you make a positive impact in one perspective and negative impacts, from something else. But for the agri-food, NPK, we believe that the solutions that will succeed and will scale and will last has to be sustainable by implicitly, because the unsustainable solutions will not succeed, because that is one of the things that innovations in the sector are trying to address. So I'm happy to share, with our with your community when that framework for Loyal VC is finalized.
It would be awesome. And since the beginning of quarantine and global lockdown, did any of our investment organizations where you are involved in make any deals or new investments?
Well, I think currently, as I said before, there may be some hesitancy from investors to put a lot of capital, but in the long term, I don't think it will it will impact the industry. You will not see a lot of new capital right now, but it's going to come back. I think investors should also exhibit discipline, stick to a well thought out strategy that identifies within their classical areas of focus, be prepared to negotiate. Now, probably you have more negotiating room, but without alienating the targets. And probably be more inventive in staging investments, such as what Loyal VC does to reduce risk. But I think good startups with a strong post-crisis Corona story will still attract competitive offers.
Yeah, the strategy of Loyal VC reminds me some ideas of blockchain investments, which were very, very popular a few years ago, but I did not see real execution of that when, for example, they spoke about ICO or STO or any other kind of tokenized investments, but not giving the full amount which startups want to raise, but actually releasing in parts according to the roadmap of the development. And then automatically smart contracts could assess if the roadmap is achieved, if the next stage is achieved, and then releases the next stage. Did you think over the same automation of the processes of investments?
Well, I think Loyal VC, I mean, it's only 2 years old. I mean, the process right now is not, let's say, machine automated. But as I said, we follow the startup over 10 months, but we also provide a large and very useful advisor network made up of really INSEADs and experts all around the world, to which they can reach out to for mentorship, for advisory, for introductions. So we not only just, set target and expect them to meet it, but to also mentor them, help them to achieve what would they like to do in the time period. But obviously there is a elimination process, right? So we have a big funnel of startups, and only those, the top 10, 20% will be able to get to the next round. Yeah.
And that is how you managed to invest in more than 100 startups, because indeed,
yes.
I was so much impressed. For less than 2 years, around 100 of investments and even more. But you speak about these small parts, yes?
Yes. So we give, 1,000 a month to early startups for 10 months, as well as the mentorship. It's a little bit like an accelerator, but except if you do well, we follow on, with 100, 200K and up to, millions. So that during this period, you can see how they do. And even if we decide not to do the follow-on, we still have a small equity stake, in the startup. I think the key insight of Loyal VC is the difficulty to assess a startup, particularly at the beginning, and even during the lifetime of the company. It's a 10 plus year journey, and even companies we know well today who are unicorns, have faced financial distress, 5 years into their into the operation. And I think VC investors like to say, well, the traditional VC, big VC like to say that it's all about deal flow, it's all about intelligence and brilliance of the VC managers. I think Loyal VC is trying to prove that, look, yes, obviously manager competence is important, but really it is a bit like playing poker. You really have to watch and see, and sometimes it's it could be luck, it could be market forces, like the current crisis, a black swan that nobody expected. But that means you need a diversified enough portfolio, to get the winners, and not just depend on deal flow and a limited number of companies in a portfolio. And just rewarding them with endless cash to capture market share. I think that strategy is going to not be popular anymore, particularly in this crisis. So.
And that is real seed approach. Actually, you throw seeds and then you see what happens. Just coming a little bit deeper, because we have startup founders watching our video interviews from varied regions, from different parts of the world, not only Europe. We have big community in Latin America, in Argentina, in Colombia, in India, in Asia, in China and Hong Kong. Many of them, they are facing problems getting investments from European or American investors, because many of them have regional limitations of in which country they invest, in which not. What about Loyal VC? Because you mentioned you are global, would you invest in, for example, Latin American startup or in an Asian startup? It is not a problem.
Yes, we're global. It's not a sector region agnostic.
In addition to food tech industry, on your opinion, what other industry sectors and technological sectors will benefit from the lockdown and pandemic situation?
Well, I think sectors like healthcare, education, home-based services, agri supply chain tech should still do well. Investors will still invest in what they perceive as winners in the current market, which are the sectors that I mentioned. But I think there will be a lot of variability within sector to which company in these sectors will do well. A startup that have gone away with high burn rates, subsidizing sales with cash in order to build market share, those will be in danger. But companies that are leaders in a strong sector, that are flexible and they have still some runway, should still do well. And I think the current crisis has given visibility to solutions that may have been less obvious before. The solution that enable telemarketing, remote working, learning, or making the healthcare system more efficient, and remind the people of what things are truly necessary and important in life, like health, food, leisure, and entertainment, for example. Now that, what do you do when you have some time stuck at home? So I think those are sectors we'll see development.
We make these videos in order to dilute geographical and administrative borders and to help you get closer to international investors, venture capitalists, market experts, and startup hubs, irrespective of what country or part of the world you are based in. And we need your support. If you like this video, please don't forget to put like button, to subscribe to our channel, and if you find it useful, I will appreciate if you share it with your teammates, co-founders, or social media networks. Thank you, and see you in the next videos.
And what about opportunities which this crisis opens? For example, given that we all now are connected online, and indeed we switched everything online, which previously we even didn't think of switching online. How do you think? Will it influence the international collaboration and fundraising aspects? It will be easier for companies from abroad, from faraway regions, to be connected with European resources and expertise.
I think on the one hand, yes. And I think for the first time, the world is actually, every country focused on one big problem, which is COVID-19. But on the other hand, you can see that this crisis has also showed the limitations of a global supply chain. You see healthcare system and social system being strained by the needs of the crisis. That will also actually reverse some of the globalization trends that we have seen. And even before this crisis, we see a lot of nationalism, protective measures coming into place. I think On the one hand, yes, it shows that digitally we're globalized and very connected. But on the other hand, countries and companies are looking to shorter value supply chains. How to ensure that you have ingredients and the parts and whatever is necessary to deal with a crisis like this in the future.
You just mentioned these barriers, like indeed nationalism and some maybe arrogance of, you mentioned that it will slowly change the environment, but will we see it in 3-5 years time, or it will take much longer?
Well, if I know what would happen in 3 to 5 years, I think I will be much more successful. I think it's nobody can predict what's going to happen in 3 to 5 years. I think the world has become more uncertain. We see big trends, but I think what's maybe different about the current crisis is that many people don't know what's next, even experts. I recently read an interview with Warren Buffett, and they were saying that for the first time at his shareholder meetings, he said he didn't know. In crisis like this, he was actually very proactively buying companies, seeing the value in lower valuations. But this time he doesn't know, and he was transparent about that. Unlike previous recessions, this one probably will last for an extended period of time. And we'll see, more mini crashes and more recoveries, just like the stock market is behaving what many sees as quite irrational and puzzling, because despite the dire trends and conditions and all the warnings about lasting recessions, it still seem to be buoyant and doing well. But I think it will be a volatile few years going forward.
So it would be time for speculations and
well, actually, yeah. I mean, the hedge funds seem to have come back in performance and popularity, because yes, they thrive on volatility, which in recent years have been more lacking.
On your opinion, you work with different regions, and if I understand correctly, you assess startups from different countries. On your opinion, what regions right now are the most tasty and attractive for investors?
Well, actually, since I'm based in Europe for the last almost 20 years, and Switzerland in the last 15, I really believe in Europe. And actually, I believe the agri-food strategy that NPK has is focused on Europe-based companies for several reasons. Europe is behind, let's say, in the US in the maturity of the VC market and its ecosystem for innovation. Therefore, this means more opportunities for companies and lower valuations. And secondly, Europe has always provided a lot of public capital to seed innovation, such as the accelerator at Climate-KIC. We seed, give grants to solutions that have already been funded by public capital or government funding, with a lot of research and development behind it. But then when they actually get to a stage where they're not yet growing rapidly, but they need to scale on their business model, there's really a lack of capital. And this is the opportunity we see. In the past, I think European companies, one of the difficulties that Europe is very fragmented, culturally, regionally, language-wise, regulation-wise. So it's very difficult to scale. But now the model is more that you develop the solution in Europe, and then you scale it in the US first, or even some of the startups already in emerging markets, because they are still going to be the growth market despite the crisis we see. And that's also where the biggest impact will be felt, whether social, environmental, or governance. So I really believe in Europe. European companies are a really good deal and sources of innovation right now.
Speaking about Europe and startups and European startup ecosystem, yeah, I think you may be biased because you live in Switzerland for 15 years, but on your opinion, which country does the best job helping startups flourish?
Depending on the country, each government seemed to always, well, currently, let's say, I would say France. Macron has really made a policy of building and scaling its ecosystem of entrepreneurs and startup companies. I see the same in Germany. Berlin is a well-known startup hub. Switzerland as well. In fact, Geneva, the Swiss Romand region of Switzerland, is a hub of a lot of agribusiness food companies, Nestle, Unilever, many are Barry Callebaut, they're all based in Switzerland. Swiss government is also, trying to support a lot of startups and startups. Netherlands actually is another hub that, particularly in agri-food, actually, they have some of the best research institutions in the world in agriculture. Obviously, London, the UK. Increasingly, Southern Europe, from Italy to Spain to Portugal, and Central Eastern Europe are growing their entrepreneurship ecosystem. And actually, those are markets that would need more capital from the EU than some of the other nations.
I hope some representatives from EU government will watch this interview and then put a few more zeros to the numbers of investors.
Well, actually, I think for example, the EIF, the European Investment Fund, which is part of the European Investment Bank, is the biggest seeder of VC funds and investor of startups. And I think they are launching schemes where they're focusing on some of these other countries, other than UK, Germany, France, the big countries, but the smaller countries.
Okay, Pen, when you see new startups coming to your funnel and think of whether to invest or not, assessing and taking investment decision, what are the three main stop factors which make you say no to these investment opportunities?
It's very hard to judge, at a very early stage. But I think first is obviously opportunity, but we really look at the scalability of the model, not what's popular and what's the market is pouring money. For example, in agri-tech, we see a lot of money have been pouring into digital apps, to help farmers to collect data, and that sector has, I think, gotten most capital than many of the other sectors within agri-food. But one of the challenges is farmer adoption, and farmers are very conservative. So it's very difficult to scale an app, a digital app, for a farmer, because each farmer is different and each country is different. So for us, that is not a very scalable model. There are far more opportunities that are far more scalable. Something else we look at is the market sector fundamentals. We believe there is a limit on the supply of food and agriculture in the future. And so what are these things? This includes feed for animals, because right now it's mostly based on soy, and that's not very sustainable. And plus, we don't have enough of it. These things have to be produced if we want to grow more food, more protein, and the demand is certain. But however, let's say, we see a lot of startups wanting to launch a new flavored drink infused by cannabis or some novel nutritious ingredient. That's really dependent on the consumer, on the brand. It's much more about the marketing of the product, rather than satisfying or meeting the demand, a fundamental demand of supply. finally, obviously, the team. I think, when you meet a startup, most the founders teams are enthusiastic. I myself have been, involved in startups. I mean, you want to make a good impression. You promise a lot. You have big ambitions. But I think one of the qualities we look for in startups founders are how receptive they are of suggestions, of adapting their business model. Because often they have a great business model, but they're not monetizing it, or they're having difficulty translating their business model solutions into actually making money. And you see that some founders are, they're passionate about what they do, and they could be experts in their field, in that sector, but they're willing to listen and they're willing to adapt, while others are just, very, very stubborn. They believe they know the best, and they will just push on no matter what the opinion or advice of others are. So I think those are three things that we look at. And there are many other factors. And as I said, I think getting to know your startup over a period is a good idea before investing, because more than anything, a startup company is the most volatile company that you will come across, especially in these times.
Yeah, definitely. This is relevant even for startups, meaning getting to know your investor, because as many experienced people say, a relationship with investor is like relationship in the couple. It is very important to be in line, to be in one wave, and to understand each other.
It's actually hard to convince a good startup to take your money because they have many options. So that's kind of the irony of it. Yet, Loyal VC, I think every startup that we've offered following investments have accepted it, even if the ticket size may not be as large or they have others, because they know that we provide funding, loyalty, and mentorship. So I think that's something also that VC investors should be aware of. Don't just invest in the startup most eagerly to take your money, because many do not, because they have better options and they look not only for funding but also strategic support and mentorship.
That is more than truth, indeed. In a lot of cases, money is simply not enough. Just money.
Yes. Yes.
If you provide mentorship, the last question will be especially relevant for this. So try to imagine your startup advisor, which actually you are from time to time. And what advice, practical advice, can you give to startup founders how to survive this difficult, turbulent period in the best possible way to ensure that while competitors are facing the same challenges and maybe become weaker, your startup can become stronger after this pandemic time?
Well, in terms of practical advice, I say conserve cash. Stop subsidizing transactions just to build market share. Profitability is relevant. Take care of your existing customers, strengthen relationship with clients and investors by being transparent, proactive, and realistic about their situation. I think entrepreneurs that can weather this crisis by adapting and strengthening their business model can argue that they really have a tested and proven model that can survive financial stress, and that would be a good thing.
Thank you very much, Pan, for your time today.
Thank you for having me. So I hope those were useful.
Indeed.
Discussions.
So thank you. Have a nice day and take care.
Thank you. You as well.